This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks have broken out as inflation cools and China moves to support its ailing property market. The S&P 500 rose 1.5% between Friday, May 10th and Friday, May 17th. It was the fourth straight positive week, with the index passing 5,300 for the first time. The Dow Jones Industrial Average also made history by crossing 40,000. The big news came on Wednesday when April's Consumer Price Index, or CPI, rose less than expected by economists. It was the first reading below consensus since October. The year-over-year increase of 3.6% was the lowest reading since 2021. Retail sales, housing data, and regional manufacturing reports were also soft. Those numbers reduced worries about inflation and pushed down interest rates. China also authorized local governments to purchase unsold real estate. It was the most aggressive support yet to the country's ailing property market, and followed moves in April to boost confidence in the stock market. The combination of news was especially bullish for metals, because the softer U.S. data weakened the dollar, which can lift metal prices. The Chinese initiative could also help demand. Copper futures surged 9% to their highest level in more than 2 years. Silver futures had their highest weekly close in over a decade. Sentiment appeared more bullish even before the inflation report. Roaring Kitty, the trader who inspired the meme stock craze in 2021, posted on social media for the first time in 3 years. That triggered short squeeze rallies in GameStop and AMC Entertainment. Strategists were also positive. Brian Belsky of BMO Capital raised his price target on the S&P 500, saying bullish momentum in May could continue in coming months. He told CNBC that markets may head higher as people continue to reallocate into stocks. Mark Chaikin also said stocks endured a short-term pullback and could rally into the election on November 5th. Ron and Santa added that downward pressure in food and airfares could pull inflation lower. Separately, FactSet reported that last earnings season saw the fewest companies mention inflation in almost 3 years. Technology was the strongest sector last week. Companies associated with artificial intelligence, like supermicrocomputers, advanced before NVIDIA's earnings report on Wednesday afternoon. The Philadelphia Semiconductor Index also had a new weekly closing high. Real estate was the second best performer thanks to lower interest rates. Still, the biggest movers were at the industry level. Chinese internet stocks, silver miners, gold miners, and industrial metals. Software, which has lagged the market for most of the year, had its best week since January. The kind of price action is consistent with lower interest rates, a weak US dollar, and slower economic growth. Traditional cyclical sectors that benefit from a strong economy lagged: industrials, chemicals, and consumer stocks. And now let's chart the market. Last week's gains came after the S&P 500 returned above its 50-day moving average. Its advanced decline line continued to hit new records, a sign of positive breadth across the market. Some chart watchers may expect follow-through after the index closed at a new high for the first time in 7 weeks. Comparable moments, with breakouts after consolidation periods, were followed by more gains. Recent examples include December 8th and January 12th. There don't seem to be many bearish patterns on the S&P 500. Other charts support a potentially bullish view of the situation. First, the 10-year Treasury yield continued lower after stalling under its late October high. That suggests investors are less worried about inflation and interest rate hikes. The U.S. dollar index followed a similar path. Second, CBOE's Volatility Index, or VIX, ended Friday's session under 12. It was the lowest weekly close since September 2018. That may reflect limited fear in the market. We'll now turn to the coming week. Its most prominent events are scheduled for Wednesday. The main items today are results from Palo Alto Networks and Zoom Video Communications after the closing bell. Lowe's, Macy's, and Chinese electric car maker Xpeng report tomorrow. Wednesday's big items are minutes from the last Federal Reserve meeting at 2 o'clock Eastern Time and NVIDIA earnings after the closing bell. The Fed minutes could influence interest rates, while NVIDIA could impact a wide range of technology stocks, especially those associated with AI. The Energy Department releases oil inventories earlier in the day. Billy, Ralph Lauren, and Medtronic issue their numbers on Thursday. Initial jobless claims are also due. Durable goods orders are scheduled for Friday morning. Thanks for watching. Please visit tradestation.com for more.